The story of America's most ambitious nuclear startup. In the fall of 2025, a company that almost no one had heard of 2 years ago suddenly found itself trading above $100 a share. The name is Oklo Inc., NYSE OKLO, a nuclear startup that promises to turn nuclear waste into clean, affordable energy through its small modular reactor, or SMR, technology. Its stock price has risen 12-fold from last year, and over 50% in just the past month. For a company that has yet to generate a single dollar of commercial revenue, that's either the making of a visionary breakthrough or a bubble in the making. But before jumping to conclusions, let's dig into what makes Oklo different, why Wall Street can't stop talking about it, and what investors should realistically expect if they're considering buying the stock at these sky-high levels. 1. A startup that is literally building power from scratch. At its core, Oklo is not your typical energy company. Founded by Jacob DeWitt and Carolyn Cochran, Oklo's mission is deceptively simple. Make nuclear power small, fast, and accessible. Traditional nuclear plants are colossal, typically covering a full square mile and producing about 1,000 megawatts of power. Building one takes years of regulatory approvals and tens of billions of dollars. Oklo, on the other hand, is pursuing a much smaller footprint, a sodium-cooled fast reactor that can fit inside a warehouse. In September 2025, Oklo broke ground on its first such facility, the Aurora Powerhouse near Idaho Falls, Idaho. This micro-reactor is designed to generate roughly 75 megawatts of power, enough to supply a mid-sized city, while being cheaper and faster to deploy than traditional nuclear plants. The reactor runs on spent nuclear fuel. Yes, the same radioactive waste that's been piling up for decades in storage facilities. Oklo's vision is to recycle that waste into usable energy, turning a long-standing environmental hazard into an energy resource. That's why the idea has captured so much attention. If Oklo's design works, it could unlock a nearly infinite source of clean baseload power and fundamentally reshape how the world thinks about nuclear energy. 2. The promise and the problem of small modular reactors. Small modular reactors aren't a new idea. Companies like NuScale Power and Rolls-Royce have been experimenting with the concept for years. But Oklo's approach stands out because it's fast fission, not the traditional slow neutron process. Theoretically, that means greater efficiency and less waste. However, the key word here is theoretically. No one has ever built a commercial sodium-cooled fast reactor that's both safe and economically viable. The physics work on paper, but engineering reality can be cruel. Oklo's project is, in essence, a massive live experiment. Its upcoming Idaho facility isn't a revenue generator yet. It's a proof-of-concept reactor designed to demonstrate criticality or sustained nuclear reaction. The U.S. Department of Energy's Reactor Pilot Program has placed Oklo among its first-wave participants, aiming to achieve criticality in 3 test reactors by July 2026. If successful, Oklo would become the first U.S. company in decades to bring a brand new reactor design to life. The implications are enormous, but so is the risk. For investors, Oklo is the nuclear equivalent of a biotech firm entering human trials. If the drug works, the company becomes a multi-billion-dollar powerhouse. If not, the dream collapses overnight. 3. Friends in high places. It's rare to see a nuclear startup with such powerful allies. When Oklo held its groundbreaking ceremony on September 22, 2025, it wasn't a small event. Attendees included U.S. Interior Secretary Doug Burgum, EPA Administrator Lee Zeldin, the governors of Idaho and Utah, U.S. Nuclear Regulatory Commission Commissioner Bradley Crowell, members of the U.S. Senate. That kind of political and regulatory support isn't just symbolic, it's strategic. Nuclear projects live or die by the approval process. Having the very agencies that regulate your industry cheering you on is a huge advantage. And Oklo's momentum didn't stop there. Only weeks before the groundbreaking, The Department of Energy, or DOE, selected Oklo for its advanced nuclear fuel line pilot projects, alongside 3 other companies. This program aims to fast-track the development of a domestic nuclear fuel supply chain, a critical national priority given rising tensions over uranium imports and the global race for energy independence. Under this DOE initiative, Oklo will build and operate 3 new fuel fabrication facilities, essentially the industrial backbone for its future reactors. It's also collaborating with its subsidiary Atomic Alchemy, which specializes in radioisotope production, another lucrative niche in nuclear medicine and deep space technology.
4. Why the government cares about Oklo. To understand Oklo's appeal, you have to look at the big picture. The world's transition to renewable energy has a glaring problem: intermittency. Solar and wind power fluctuate with weather and daylight. Energy storage solutions like lithium-ion batteries can only do so much. Nuclear power, on the other hand, provides steady, round-the-clock baseload energy. It's carbon-free, energy-dense, and already proven at scale. But old-school nuclear is slow, expensive, and politically fraught. That's where Oklo steps in, offering a scalable, flexible, and potentially safer alternative. The DOE's reactor pilot and fuel line projects are part of a broader government effort to reinvigorate America's nuclear energy industry after decades of stagnation. Executive orders signed in May 2025 explicitly mention accelerating the deployment of advanced reactors, a category that includes Oklo's design. If successful, Oklo could become to nuclear power what SpaceX became to spaceflight, a private sector engine for innovation in an industry long dominated by government and legacy players. 5. The numbers behind the hype. So what's Oklo really worth today? At the time of writing, Oklo's market capitalization sits around $17 billion, with no commercial revenue and no completed reactor. On traditional valuation metrics, that's astronomical. Let's put that in perspective. PPL Corporation, NYSE PPL, a major U.S. utility with 7.5 to 8.5 gigawatts of generation capacity, has a market cap around $27 billion. WEC Energy Group, NYSE WEC, another established energy provider, trades near $37 billion. Oklo claims a potential customer pipeline of 14 gigawatts GW, roughly double those peers. But the key word is potential. Those customers haven't yet signed purchase contracts or paid deposits. At a current price-to-book ratio of 27.3x, Oklo's valuation towers over the electric utilities industry average of 1.9x. Even the most optimistic analysts would call that priced for perfection. So why are investors paying such a premium? Because in markets driven by innovation, hope is a powerful currency. Oklo represents a bet not just on one company, but on the future of nuclear power itself. Investors aren't buying its present, they're buying its promise. 6. How Oklo plans to make money. Oklo's business model is deceptively simple: build reactors, sell power, and license its technology. But its vision extends beyond electricity generation. Through fuel recycling, Oklo aims to convert existing nuclear waste into new energy, effectively creating a closed-loop system. It's also investing heavily in producing high-assay low-enriched uranium, HALEU, a specialized fuel type that advanced reactors require and that the U.S. currently imports in large quantities from overseas suppliers. In August 2025, Oklo announced a fuel recycling facility in Tennessee, the first phase of its larger Advanced Fuel Center, with an estimated investment of $1.68 billion. That facility could eventually generate multiple revenue streams: fuel sales to other SMR developers, licensing fees for Oklo's reactor design, power purchase agreements with industrial clients or municipalities. Oklo isn't just building reactors, it's trying to build the entire nuclear supply chain. 7. The momentum story. Momentum matters in the stock market, and Oklo has it in abundance. Its share price surged 11% in a single day and 75% over the past month. That kind of performance naturally catches attention, both from retail traders looking for the next Tesla and from institutional investors positioning for exposure to clean energy innovation. The company's 12.7% one-year total shareholder return may not sound massive next to its recent monthly run-up, but it signals consistent positive sentiment building over time. Momentum, however, can be a double-edged sword. When sentiment drives price faster than fundamentals can catch up, corrections can be swift and brutal. Still, in markets that reward visionary narratives, Oklo's story fits the times perfectly. A bold, futuristic solution to the world's energy crisis, backed by government initiatives and Wall Street optimism.
8. Is Oklo overvalued or just early? Critics argue that Oklo's valuation, particularly its 27x book multiple, is unsustainable. Supporters counter that such ratios are meaningless for a company still in the R&D phase. Both are right. Traditional valuation models like price to book or price to earnings don't work well for pre-revenue innovators. Investors are essentially valuing future potential cash flow discounted for risk. If Oklo's technology works, if the DOE program leads to certification by 2026, and if it can secure long-term contracts with energy buyers, its $17 billion valuation could look cheap in hindsight. But if delays, technical challenges, or regulatory hurdles derail the project, Oklo's market cap could evaporate overnight. This is why analysts describe Oklo as a high beta stock, one that can move dramatically in both directions. It's speculative by nature. 9. Comparing Oklo to other energy innovators. To understand Oklo's place in the market, it helps to compare it to previous moonshot clean energy bets. Tesla, 2013-2019. Pre-profit, high burn rate, massive short interest, yet believers were rewarded 100x. Plug Power, 2020-2021. Soaring hydrogen hype, followed by valuation collapse as execution lagged. NewScale, another SMR developer, now facing cost overruns and slower than expected adoption. Oklo's future could mirror any of these trajectories. The difference lies in execution. Tesla had proven cars and rising demand. Plug Power had visionary tech but weak economics. NewScale has government backing but struggles with scalability. Oklo, for now, is all promise, no product. That's not necessarily bad. Early investors in transformative technologies often buy years before profits appear, but it does mean patience and risk tolerance are essential. 11. The science behind the dream. Let's take a closer look at the technology that underpins Oklo's value proposition. Oklo's Aurora reactor uses a liquid sodium coolant instead of water. Sodium has a much higher boiling point, allowing the reactor to operate at atmospheric pressure rather than the high pressures of conventional reactors. This theoretically improves safety by reducing explosion risks. The design also enables a walk-away safe feature. In an emergency shutdown, the reactor naturally cools without human intervention or external power, an enormous advantage over older designs that rely on active cooling systems. Because the Aurora reactor can use recycled nuclear waste as fuel, it also reduces long-term storage needs, a politically sensitive issue that's plagued the industry for decades. If the system performs as expected, Oklo's model could drastically cut both the cost and environmental footprint of nuclear energy, potentially even undercutting solar and wind on a per-megawatt basis once scaled.
How big could Oklo get? The global nuclear market is quietly re-accelerating. After decades of decline post-Fukushima, a combination of energy security concerns, climate mandates, and AI-driven electricity demand is forcing policymakers to rethink nuclear. According to the International Energy Agency, IEA, global electricity demand will grow 25% by 2030, with data centers alone consuming 8% of total generation. Traditional grid upgrades can't meet that demand without new baseload sources. That's where micro-reactors come in. They can be built faster, deployed locally, and scaled modularly. If Oklo can capture even a 1% share of new nuclear generation capacity built worldwide over the next decade, it could translate to billions in annual revenue. Moreover, Oklo's fuel recycling technology positions it uniquely in the market. As governments push to reduce nuclear waste and secure domestic fuel supply, Oklo could earn lucrative contracts not just for power generation, but also for waste management and isotopic recovery. 12. Risks you can't ignore. No investment story is complete without acknowledging the downside. Oklo faces multiple layers of risk: technological, regulatory, financial, and operational. Technology risk. The Aurora reactor has never operated at commercial scale. Any failure during testing could set the company back years. Regulatory risk. Even with DOE and NRC support, nuclear approval is complex. A single safety concern can halt progress indefinitely. Funding risk. Oklo will likely require billions more in capital to scale deployment. Dilution or debt could weigh on shareholder returns. Market risk. Competing SMR developers like TerraPower, backed by Bill Gates, and NewScale are chasing similar goals. Execution risk. Transitioning from prototype to production is notoriously difficult in nuclear. Timelines often double, costs triple. Oklo's forward-looking statements, in fact, emphasize these uncertainties clearly, a reminder that visionary press releases often include heavy disclaimers for good reason. 13. The narrative that moves markets. If you step back, Oklo isn't just an energy story. It's a narrative stock. It sits at the intersection of several powerful macro themes: clean energy transition, national energy independence, AI and data center power needs, waste recycling and sustainability. Investors today are often drawn not just to fundamentals, but to vision, and Oklo has crafted one that resonates deeply with both climate-focused and tech-futurist audiences. When narratives align with momentum, valuations can decouple from reality for extended periods. But when sentiment shifts, they can deflate just as fast. That's why smart investors treat narrative stocks as option-like positions, asymmetric bets where limited downside, a small position, can capture enormous upside if the story plays out. 14. What would success look like? Let's imagine Oklo succeeds. Its first Aurora reactor achieves criticality by mid-2026, passes safety inspections, and secures early commercial clients. In that scenario, revenue from initial contracts could begin as early as 2027. The DOE partnership could expand, unlocking additional funding and subsidies. Institutional investors could re-rate Oklo as a legitimate clean energy utility rather than a speculative tech play. At that point, a valuation north of $50 to $60 billion wouldn't be implausible, roughly matching large-cap utilities. But that's the bull case. The bear case is simple. If the reactor underperforms or regulatory approval stalls, Oklo's share price could fall back to earth, possibly below $20. For now, investors are betting the first scenario wins. 15. Final thoughts. Betting on the nuclear renaissance. Oklo represents the boldest attempt yet to reimagine nuclear energy for the 21st century. Its vision, turning waste into power, building micro-reactors that fit inside warehouses, and reviving the domestic nuclear supply chain, is nothing short of revolutionary. The company's government partnerships, fuel fabrication projects, and rapid-fire progress in 2025 give its story credibility. Yet it remains a speculative venture in an industry that punishes overconfidence. At over $100 per share, Oklo is priced as if it will succeed, not just experiment. That means today's buyers must accept volatility, long timelines, and the ever-present risk of technical setbacks. Still, for investors who believe in the dawn of a nuclear renaissance where data center demand, climate urgency, and national security converge, Oklo is one of the purest plays available. You're not just buying a stock, you're buying a vision of the future, one where humanity's most feared energy source becomes its cleanest and most reliable ally. Investment thesis summary. Factor: bullish case, bearish case. Technology: fast fission SMR design could revolutionize nuclear energy, unproven at commercial scale. Government support: DOE, NRC, EPA, and state officials backing multiple projects. Political wins can shift quickly. Valuation: massive future potential justifies current premium. PB27X signals extreme optimism. Market demand: rising AI and grid power needs favor new baseload sources. Competing SMR startups may outpace Oklo. Timeline: commercial readiness by 2026-2027. Delays could crush near-term momentum. The bottom line: Oklo is one of the most fascinating and polarizing stocks in the market today. It sits at the crossroads of innovation, policy, and hope. If the Aurora project succeeds, Oklo won't just light up towns. It could ignite a new era for clean energy investors. But if it fails, it'll serve as another cautionary tale of how even the brightest ideas can be dimmed by the harsh realities of physics and finance. Either way, Oklo has already succeeded at one thing, reminding the world that the race for sustainable power is far from over, and the future might just glow brighter than we think.